Good morning, everyone. Welcome. Welcome to the Building Effective Banking and Lender Relationships webinar. It's an initiative of the Chicagoland Chamber of Commerce's first Diversity, Equity, and Inclusion Task Force, which was formed last year. And so we're excited to have everyone join us to have some real conversation about banking relationships. Before we get started, just a little housekeeping. We will be recording this session, so this session will be available via recording after the session wraps up today, and other information, links, and any information that we discuss will pass along. And I'll introduce myself. So my name is Stacey Pitts-Caldwell. I'm the Small Business Director at the Chicagoland Chamber of Commerce, also the Center Director of our Illinois Small Business Development Center. And I'm really excited about today. So we have a great panel, a great moderator to have some really provocative conversation, hopefully, about what it really means to have a lender relationship with banks or any other lenders that you may be looking at. So without further ado, I'm going to introduce everyone, and then we're going to kick it off, and then we'll have about 20 minutes towards the end for some real questions for a Q&A session. So I'll go ahead and monitor that. You just want to put your questions in the chat, and then I can ask them aloud to the panelists. So let's get started. I want to introduce first our moderator, Melissa Donaldson, who is the Senior VP and Chief Diversity Officer at Wintrust. And Melissa is also on our Diversity, Equity, and Inclusion Task Force. So Melissa is going to actually pose some of these discussion questions to the panelists. We also have with us our panel, Dr. Papa Kwesi Nduom. He is the chairman of GN Bank, as well as Daryl Newell, who's the president of Seaway Self-Help Federal Credit Union, and then Ronald Millsap, who is the VP of Mission Banking and Community Reinvestment, Act Officer of Providence Bank and Trust. So welcome, everybody. And Melissa, I'll turn it over to you to get us started.
Thank you, Stacey, and good morning, and welcome to everyone, and welcome to all of our panelists as well. So as Stacey mentioned, I am a member of the Chicagoland Chamber of Commerce Diversity, Equity, and Inclusion Task Force. And one of the things we always focus on is around how are we moving the needle with respect to racial equity in terms of small business engagement. So I have three panelists here who are very much steeped in banking in their own respects. And it's nice to have friendly conversations with competition today. But what we want to focus on is everything from how lenders build relationships with small business owners and what that looks like, to what are the implications of the CARES Act and this new normal that COVID has presented for us. But I wanted to start off with giving a few statistics that I found very interesting from the U.S. Census Bureau. So their 2018 annual business survey showed that there are actually 1.1 million women-owned businesses in the U.S. and 1 million minority-owned businesses in the U.S. And 500,000 of those businesses are designated as Asian-owned, 324,000 designated as Hispanic-owned, and 124,000 that are designated as Black-owned. And so in 2019, that actually marked the 50th anniversary of the Minority Business Development Agency, which is formerly known as the Office of Minority Business Enterprise, or the OMBE, as some of us used to call it back in the day. And so it says that over those 50 years or so that the minority business growth has really ballooned to about 30% of overall business population, and that they're actually employing more than 7 million people in the US. So it certainly underscores the fact that small business is critical to a vital economy and to vibrant communities. And so while the numbers suggest that we've come a long way over the years, it's certainly clear that we have yet a long way to go. And so this discussion is designed to really help entrepreneurs, those small business soldiers, those small business owners, to position themselves for greater success in an increasingly competitive marketplace. And so with that, I'm going to kick off, and I'm going to ask each of our panelists if they would answer this question for us. So how has banking with lenders changed over the years? What have you seen the adjustments be over the years?
Well,
Anyone who wants to start,
sure,
please,
sure.
Dr. Quayson.
Well, sure. I'll begin. Well, it used to be that you had to do all of your relationships physically with a lender. So you had to get to be in physical proximity with someone. And that has changed considerably. As a matter of fact, in many places, even if you want to go and talk to someone physically, someone in the banking hall might point you to a computer or ask you to pick up a phone and call somebody. So that personal thing is no longer there. Now, I'll tell you, in a few places where I've done business, I'll say 20 years ago, you had to be introduced to somebody. I mean, somebody had to tell you what to do. Now, just give you a little story, just very, very briefly. I was transferred, I used to work with Deloitte, was a partner with Deloitte. At that time, it was called Touche Ross in Milwaukee. And I was transferred to Washington, D.C. office. Well, the first thing that happened was that there used to be a bank, it's no longer there, called First American. Now, First American said every Touche Ross partner needed to go to private banking. It's a separate building on the 14th floor, somewhere in DC, and plush carpeting, nice furniture. And that's how they served you. And it was personal, very, very personal, very direct. Anything I wanted, anything you wanted, it was provided. Well, not too many people are doing that any longer. It has become rather, let's say, relatively impersonal. And so it has changed. That sort of high touch has become more high tech and quite a bit impersonal. So we've got to figure a way to bring that high touch or some measure of the personal touch or the human touch in there. And because that does not exist any longer, it is difficult to get personal service in many places.
Certainly, and you've done business all over the world, and so using even technology to help, bring in multi-sensory experiences are going to be important for the future as well. What do you think, Daryl? You're with Seaway. You've seen some things in your career. What do you think? How's it changed?
Well, in addition to not being as personal as it used to be, I recall being a young banker thrilled about going to credit class. I'm finally going to credit class. I can approve some loans for my people. And guess what happened? This thing called the central utility happened. So I could talk to you, still be a little personal, but after I heard your story, I could not influence the credit decision. I would just take your application. I'd tell you a little bit about the process. I tell you what you need to look out for. I'd send it to somebody else, right? It's kind of like that tech thing, right? That way they can just have me talking to as many people as I could see and then send the app to someone else. So the story that you used to be able to share with your lender that Doc talked about went away as well. So the person that you pretty much opened up to wasn't the person that was going to actually approve your credit request. Right. And so now you're at the mercy of someone who really needed to understand the credit process at their institution to document all of the other stuff you told them that wasn't going to be communicated in the financial statements. So that's the biggest change that I've seen. And it really impacted all financial institutions. The underwriters became more efficient, but the small business owners lost a lot when it came to local market knowledge. Right. And so I really see that that's what's really changed, the ability for lenders who have the local market knowledge to really put the money where it needs to be in the community without someone else in a remote area second guessing their decision to lend.
Interesting. And Derek, can you speak a little bit more about some examples of that local market knowledge? Like, I imagine you're talking about some of those things that are between the boxes on the application, so to speak. So,
sure. So what I talk about local market knowledge, what's the local ecosystems? If it's international, we hear the word geopolitical. But if it's in Chicago, what's the alderman doing? What ward or what geographic region has the mayor or the Department of Planning deemed to be an area that you want to invest in? What are some of the other programs you have, new markets tax credits being offered, empowerment zones, and the other things that allow the credit to be able to receive some extra benefit, right? Especially when you're talking about smaller transactions, the smaller, the riskier. So it's all about mitigating the risk. So that local market knowledge is what I'm talking about. The local lender knowing that between 22nd Street and 47th Street, between King Drive and the Dan Ryan is redeveloping, right? Projects are gone, right? The metro train line is there, right? I can still call it Kaminsky. Kaminsky is across the street. I guarantee you, right? That's how old I am. Kaminsky is across the street, and they've got one train stop on 35th Street, and they put all the fiber down between 22nd Street and 95th Street on State Street. I'm like, prime for redevelopment. So that's what I mean by local market knowledge. Those other intangibles the guys in Oklahoma have no clue about.
yeah.
They just watching television. They got these misconceptions about Chicago. They see a riot, they see the mayor on TV.
Sure.
They don't really understand what's happened in that particular spot, in that particular community that's good for business.
Sure. So you're talking about taking word on the street to a whole new level. Like it actually has some value.
That's part of the credit analysis, right?
Yeah.
What's going on that's going to help the local business owner? If they tell me they're in the chamber, how good is that chamber? What type of support are they providing? The Illinois Small Business Association. Yeah. What's going on? Are there resources available? What's the government doing to make sure that business is successful? And do you have the amenities in that particular community? When I say amenities, the daycares, the shops,
sure.
Maybe the churches that really help make the community vibrant. Homeowners associations. All those little things count, and the centralized utility has no idea about it.
Okay, very good. So Ron, you know of a little something about the word on the street, as the Community Reinvestment Act officer. What have you seen change over the years?
Interesting, because I came into banking. I still think I'm rather young, but came into banking at an interesting time. And I remember coming in being so much of a kind of old boys network, right? I'm not sure if it was a network that actually ever really worked for minorities in the space of banking, but I remember credit committees and handshake deals and somewhat, not necessarily a completely lax credit environment, but an environment where if we can vet those 5 C's and really get comfortable with the character, then there was lending decisions that I've seen made. I think what I've seen is a tightening of credit and overall like regulatory push that makes doing community banking and small business lending a lot more difficult in terms of lending. So I've seen customers go from a pendulum of where banks were very relationship oriented to that aspect of technology coming in, and then that credit getting tighter and tighter and tighter, almost to the point of strangling small business. So small business now looks to all these other pillars of credit, whether it be the quick loan that they can get from an online provider. So it's a lot of toxic credit that gets in the environment and banking. So if I'm a small business owner and my experience is I need to make this decision right now, I'm going to go to what's most easily accessible and convenient. I'll think about the punitive side a little bit later, but I think banks, while have moved quite a bit with technology, still lack the innovation to meet a small business exactly where they are. And I think we'll get into PPP, but what I really I guess kind of really just surprised me about that entire process is the will of the government to put a program like that in place where you didn't have the traditional pillars of credit involved, and it helped get the businesses their emergency need and access that they needed to have. And I wonder how we reinvent banking going forward, particularly for minority communities, to think about innovative programs that don't have maybe all of the checks in terms of all what we typically require for strong credit, but have some government or other philanthropic supports that help us to take risks that we wouldn't ordinarily take in the banking space when it comes to relationship building.
Mm-hmm. So that's where entities like the Chamber, for example, can be really helpful and valuable to help bridge some of that gap in knowledge. Is that what you're saying?
I think in a lot of ways, like that's what chambers exist for, to be that strong advocacy. And where do we need to push policy to really start thinking about how we bring more capital to communities that need it, and more small businesses that need it than what's currently available.
Okay. Well, Dr. Quessy, can you share with us how has banking with lenders doesn't necessarily mean you have a relationship with a banker? We saw that when the 2 waves of the payroll protection program funds were being let as part of the CARES Act, there were some small businesses who felt like they were left out of the loop, and that was partially because they really didn't have a relationship with the banker. So you talk about, just knowing a banker isn't having a relationship with a banker. So can you expand on that?
Well, we've sort of been talking about that from the very beginning. The innovation, the technology, everything that has happened has brought about this relatively impersonal relationship. So yeah, you got a loan, you went through a process, you use technology to get it. Well, guess what? You don't have a relationship with a human being. And that trust that comes from sitting across from somebody, from having someone know your birthday, for having someone be able to invite you for a drink somewhere, or out to lunch somewhere. Well, you don't have that. And that's not just for low income people. It is for high income people as well. And from time to time, I go talking to my bankers, because just because I'm a chairman of a bank, it doesn't mean I can go to my bank and get the funds that I need, because there's conflict of interest and also for other considerations. So in order for me to do the kind of business that I should do from time to time, I need a personal relationship with someone that I cannot get using the processes that are in there today. Many banks are using consultants. So you apply, your application goes to a consultant. The consultant is done with their work, they go away. Your file or your records are handed over to someone else who does credit administration. There's a story of a bank in Chicago, I will not mention their name. They did not experience a lot of the downturn that went when many banks and many loans went bad during the banking crisis. Well, part of the reason is before they would give you a mortgage loan, they sat with you. They came to visit you. They talked to you. They looked around. So they got to know you. And every quarter they gave you a phone call. They made a phone call to see whether you're still there or not. Well, how many of our banks do that? Okay. How many of our people do it? How many of our, I might say that at our bank, at GN Bank, every now and then, I can tell that my management people are talking behind my back, because I ask them, how many people have you called? And then they tell me, well, do we have a problem? I said, no. It's not about a problem. It is about a relationship. It is about maintaining contact. and it's about being different. So I'm just saying, so just because somebody's giving you a loan to buy a car, to buy a house, to start a business, doesn't mean you have a relationship with them, because a lot of it has to do with numbers. A lot of it has to do with your credit score being okay. But it doesn't mean that someone believes in you, your vision, and anything else. And so when an opportunity comes up, whether it's PPP or anything else, well, somebody's going through getting to know you all over again. So we cannot assume that just because I have an account, I have a loan, I can go and get another one. Okay. So the work is, in actual fact, hasn't been made easier with the technology. It has been made more difficult from a human standpoint. So we have to make the effort to keep up the contact. So if my bank won't call me, I got to call my bank. Or find somebody at the bank to maintain a relationship with. Not when I need it, but when things are good. Tell your story and let people know. The only thing that I believe that GN Bank has done in the past year that has been helpful is that I make the board of directors, a couple of them, call one of our customers and have a meeting with them. Just to have a meeting with them, just to say hello. They do it once a quarter. So it's not a lot of different people, but at least one or two or three or four or five people are getting called to say, well, do you have a few minutes? We'll come and see you, or we'll talk to you. That is missing, but that is needed. And particularly in our communities, whether it's on the south side, west side, near north side, we need those kinds of relationships. They're just simply not there, and we can't take it for granted just because we have a loan or we have a bank account.
Great. So Daryl, you talked about having the word on the street and coupling that with this challenges of technology and things sort of moving rapidly, and businesses having some choice. Or seemingly some choice in who they do business with. What are some of the things that minority business can do right now to improve upon some of those relationships with those lenders? Because as you also mentioned, lenders have choice as well. So how can minority businesses position themselves the best to get access to some of that funding?
Well, that's a great question, because I've always told people all banks and financial institutions can't be all things to all people. So first of all, I always tell small business owners, you want to be with a smaller community bank and you want to be with a larger bank. And you want to go and find out what industries they prefer, they cater to, that they're good at managing. The one thing that I learned, especially as the larger you get, if guys don't understand your industry, it's usually no. Right? Because there's a lot of complexity. You got to understand the management, the markets, the material, and the money, right? And all industries underwrite differently. Accounting firms underwrite differently than, Harold's Chicken, than, a manufacturer with widgets. So everything underwrites differently. It's all cash flow analysis, but it underwrites differently. So I'd suggest to people that go out and do your homework around which lenders are preferred SBA lenders, right? Which lenders are issuing lines of credit based on your deposit balances, right? Because they can understand your cash flow just based on the frequency of your deposits, but everyone doesn't lend like that. So spend some time doing some homework. Like Ron talked about, it's easy to call some of these Capital Ones and American Express and give them your social security number and by the time you wait, everything's spinning, and 60 seconds later, boom, boom, you've been approved for $20,000, right? But you got to do more than that. Yeah, like you said, but the devil's in the details. We don't know what comes with the $20,000. As Dr. Quasey suggested, if you come in and talk to me, we know what's involved, right? And you can really sit down and have those conversations about, this is my story, this is what I do, this is my business model, right? And then the banker can tell you if this is a good fit for you. It may be a great fit from a deposit standpoint because you might be getting great rates, but they may not be the best lender. So I want you to get out there. I want you to find which company is the best insurance company, right? I want you to find out which company is the best place to put your 401k plan, right? I want you to get out there and find out which place is the best place to put your extra money. That's what, for the small business folks, that's what the big people call treasury management, right? Where can you get the half basis point of the 1% on your extra money, right? So you got to do a little bit more work to figure out how to put it together. And I tell people all the time, get a team. You need an accountant, you need an attorney, you need a banker, right? And you need all those people because those advisors will assist you in getting to the right place because they have other clients too, right? You know, we didn't ask Doc to talk about his accounting background, but I'm sure he's got a lot of knowledge. He's a small business owner. You could learn a lot from just calling him up and going to GM Bank, right? And just having a conversation to say, what industries do you like? Are you a preferred lender? Just ask questions. You know, I got a guy that calls me every morning at 7:30. Right? He's got a deposit account with me. We can't give him any credit because he's got the best credit going. He's got vendor credit, right? He's got vendor credit. I was like, dude, you got what? You got what terms? They do what for you? So there's even different types of credit that you want to acquire. And it doesn't bother me that he doesn't have a loan for me because I get the deposit account. I was like, yeah, man, keep getting that vendor credit. That's what you need. Put the money over here. And then I also counsel them on, you know, you got to have health insurance, right? Because if you get sick, you're a one-man show, bro. You got to have health insurance. You still have to know how to pay me in business interruption insurance and key man life and all those other things that make the banker feel comfortable. If and when you do get a loan, you can repay me. Now, the other piece of advice I would give was like Dr. Quasey said, is you want to talk to somebody. And I've got examples where nobody ever gets to me, but they spend time with my branch managers and my area managers, right? So a lot of times during this whole PPP process, I was getting calls from managers. They were breaking it down. This person's been a member since, 1975. They knew the mama, the grandmama. They knew how often they came in to the safe deposit box. They could brief me, and by that conversation, now they had a relationship with me, right? And I knew something about them. I knew how long they've been loyal to us, right? I knew about all the good times. Right. And we were able to work with them because that relationship allows people to peel back the onion, so to speak. People don't always want to open up about their financials. Right. That's why the relationship is important because nobody wants to feel as though they made a bonehead decision. Right. And sometimes you think you made a bonehead decision. It's really a good decision. Right. But you don't know until you just have a regular conversation. Let's just check in, give an update on what the grandbaby's doing, who's going to college. I got a new house, a new car. I'm going to visit the family, I'm going to the family reunion. All those things matter because it tells me something about you. Are you going to do what you said you were going to do and how honest you are, right? And that's what builds the trust for the banker to go out on the limb, take that local market knowledge I talked about, use those 5 C's that Ron talked about, get out there and get the deal done for you, not only for you, but for the community that you're serving, right? So that's the way I'd like to tell people to do it. And by talking to bankers, good, honest bankers will just tell you, I can't do it, but let me tell you who to call. I got my people at Wintrust I call Marcia Nicholson. I got my people at Providence that I call. I got Doc, I can call him at G, and I can walk down the street to get to him. Right? He may not let me get into the meeting because he's in credit committee, but you got to know who to call because we're all in the same neighborhood, right? Yeah. So like you said, we're frenemies. Yeah. Right. We're here to help each other, right? And we have to share the knowledge for our community businesses to thrive, and that's part of the local market knowledge, right? Right. I mean, you don't want to break any antitrust laws, but if I know that you have a better product than me and I can't provide it at a reasonable cost, I am obligated, in my opinion, to make a call to the competitor to say, we got to do what's right for this business owner, right? That business owner is employing people that probably look like us, right? And that helps everybody in the ecosystem. It helps every bank. Yeah. It helps everybody.
May I just butt in a bit for a second here on what something Dara just said?
Sure.
We all know there's such a thing as participation. So just because an opportunity came to me doesn't mean I can't go to Ron's bank or Daryl's bank and ask them to participate, or Melissa's bank. So knowing each other
Yeah.
and talking to different people. I may be a small bank, but if I like your business, if I value the relationship, and I can't handle it because it's just too big for me, well, I will take it to the next step, to the next person.
Mm-hmm.
So there are those kinds of things that some of our prospective customers don't know, or people who are looking for money don't know, that indeed we can and do work together. But so we also as lenders work on relationships, and those relationships, they help us and they help our customers. So that's just what I wanted to chip in with.
Okay. Well, that's all incredible advice, and I hope that our guests, our listeners are sending in their questions and writing down their thoughts. I know one of the questions that I have that maybe Stacy might be able to put into the chat is, are there some specific websites that business owners can explore to get at some of that intelligence that Daryl spoke about, and do some of that research as well? Because I'm a newer convert to financial services and banking, and it's only been within the last 5 years, and it is very layered. There's more to it than meets the eye, and so having that inside knowledge and not being intimidated by, gosh, if I walk into this one facility, I'm just going to be, blasted with lots of questions and so forth, that there actually is the potential that someone may refer you to someone else at a different institution. But how do I get a sense of what kinds of banks do what kinds of lending? I think would be helpful. Ronald, let me shift to you. Our new normal, we're all having this wonderful discussion all over technology. And so, COVID continues to create a new normal for us. So can you talk about how minority businesses may need to adjust or have adjusted in the age of COVID, and how are they able to continue to persevere, and any advice that you would give?
One of the things that come to mind is your emergency preparedness plan. And if you're a physical brick and mortar and you're in retail or other severely impacted industries, what are you doing to get a digital strategy? Get those products online, get those products sold not only in your current marketplace, but leveraging digital marketplaces like Amazon and the like that's out there for you to capitalize on the opportunity to get your product out there. You really get a sense of who you are as a person in the space of business when you're stressed. I think we talked about relationships quite a bit. We didn't talk about relationships from a stress standpoint, or how we're dealing with managing business from a stress standpoint. I think you really, really uncover some layers of your own character when you're in the pressure. Mm-hmm. Pressure can bust pipes or it can mold diamonds. And I think step into the mold of what those signs are telling you in your business, really going to a critical analysis of questions. And in the space of relationships, this is where you want to be your most vulnerable and your most honest. I think oftentimes, and I've wore a couple of hats in banking where I've been the lender, the underwriter, and the workout person. And I think, I always appreciated the community banking aspect of relationship building because of that local kind of marketplace, how you deal with stress credits. It may be a client that you're calling to come over and take over a building, or a client that is in this particular industry and may be able to partner or acquire this particular asset that's troubled. So I think in those type of situations, you really find out what type of relationships you truly have. Mm-hmm. And it's much like life, right? When we go through some of our worst times, we find out who our real friends are, mm-hmm. who shows up for us in that time of need. I think banks, business industry, and how you approach your business, you learn a lot of those same kind of valuable lessons. Spending a lot of time going through COVID myself, dealing with the stresses of working from home, schooling from home, lacking and feeling deprived of so many things that I enjoy. And, how do you pivot in your own space to really deal with these challenges? So it made me think about that and reflect on that. What's that like for my customer? What are they going to? Because they probably have all those things, plus the responsibility of managing this business. And if they're in people-centered businesses where they convene people or they're used to folks coming into a public space, if they're not an essential business, then, it's frightening to think about that, right? It's frightening to think about what do you do when you don't have your regular revenue coming through the door. So I challenge you to, in that space of going to your bank or your banker and really being clear and candid about where you are and what kind of support you need from your banker. We can anticipate, because we're going through our own portfolios. We're looking at risk. We're looking at problem loans. We know who's not paying. We've done some payment deferrals. We've done things to kind of help people weather the storm. But we don't know all the stories. Because you're paying don't mean you're well. Doesn't mean that you don't have down the road. So I think there's this opportunity to only address these issues in-house in terms of your own kind of strategic planning, but to really use and look for external partners and your bankers to be ahead of this conversation. We don't want to be the one that gets the last phone call. You really should be thinking about your banker as a partner, and how can you educate them about the industry, the cycle that you're currently in, and get not just maybe the solution that they offer everybody in terms of deferment period, but maybe you need an extended deferment period because your industry has some unique aspect to it, but you have a plan to work through it. If you're not having those conversations, you're already behind the 8 ball, to be quite honest with you, because we've been in this thing now, almost 9 months, it feels like. December is here. We're going into Thanksgiving, and we started this thing in March. So I really want people to think about, like, if you're gun shy, there's some fear, overcome it, start having these conversations and get your plans in place.
Because nobody looks like their story, right? And the one thing that COVID has done, it's kind of leveled the playing field for a lot of us, right? It's just like, listen, we're all struggling with this thing. So, I hear you saying, Ronald, like, don't be embarrassed, be honest, and get the counsel that you need so you can move forward.
There's always, there's a nuance to understanding that, particularly, and I'm talking to my minority community again. You already have certain stereotypes, certain types of statistics, certain kind of barriers to banking where you already have this perception. I don't want to be completely honest. If I tell my banker I got this asset or that asset, they're going to try to tell it. They're going to try to tie all my securities up. They're going to, if they foreclose on me or work me out, they're going to try to take everything. I think people have a natural trepidation when they approach banks. Right. They don't see us as partners. But if you lose, I lose, and we both lose. So I think when we sign that document, there's a partnership element to it. It's beyond just the bank making a spread on this loan. It's a real partnership aspect to it at its highest level. Banks realize that they share in the upside and the downside risk of the businesses they serve. So if you've already got these stigmas you're dealing with because of your preconceived notions about banks, and particularly how banks are intersecting with minority communities, you really got to get at that from your own experience. Don't just listen to what people say. Really go knock on the door, ask some tough questions, and having it, like, people will tell you that this food is bad or this movie's bad. Like, you got to sometimes experience it for yourself. Yep. And it may be bad, and that can also be the aspect of realizing, okay, if this bank only wanted me when things are good, when cash flow was positive, when real estate values were at their highest, was I ever truly in relationship with that particular banker? Because I'll tell you, in a relationship, you got to be able to experience the highs and the lows. And if you have a banker or a bank entity that's not presenting that same type of relationship to you, then you really need to think about, finding a partner in the aspect of operating your business.
Sure. Well, wow, these were all incredible points. And Stacy, do we have questions that have come in? Because I want to make sure that we get as many as we can.
Yeah, we're on the same page because we've got a couple of questions to come in. So we can start the questions. I'll start with one with Greg. Greg's on here, and he had a question. We mentioned the 5 C's. So he asked, can Ron and Daryl break down what the 5 C's for small business owners are?
You got character, you got condition, you got collateral, capacity. Am I missing one, Daryl?
You looking it up?
No,
Yeah.
he said collateral, capacity, condition, credit.
Collateral.
And there's one more.
Character, collateral, capacity, conditions, and
credit.
credit's
Right?
not one of them.
I was gonna say
How did I miss credit?
Rita says it's credit.
there we go. Collateral, capacity, character, conditions, and credit. I threw it in the chat.
Yeah. I thought credit was,
Okay.
I thought these were the 5 conditions to credit, but
Oh,
so again, the 5 C's to pay attention to are character, collateral, conditions, capacity, and credit.
yeah.
Okay, great.
Okay. We have another question from Cynthia. Cynthia says, and this is a good question because I get this a lot when I advise small businesses. Should you develop a bank package which tells your story? And if so, are there templates and I'll add to your question, Cynthia, are templates frowned upon?
Okay, let me answer that one because I'm probably the least qualified guy to be a lender out of the panel. I just went to credit class twice. But I've never underwritten everything. I've always been the manager and seen the policy. But when I was writing my business plan to get my degree, we used this template called Preparing a Successful Business Plan, a practical guide for small business by Roger, and that's spelled RodgerD Touchie, Touchie. And he's got 13 templates. If you can answer the questions about your business in every last template and write your executive summary last, you never write your executive summary first. You write the entire plan and your executive summary comes last. And you're going to have to do 5 years of financial projections. And the first 2 years need to be monthly. After the second year, you can move to quarterly projections. And then what you can do is once you get that business plan done, right? Then you can come up with what we call a loan summary. But you want to have that detailed business plan. And now is a great time for it because like Ron talked about, the new term is you got to pivot. When I was growing up, it's called you got to diversify. Right. So, putting your thoughts down on paper using those templates will enable you to then talk about your business from the perspective that the banker is interested in. Because remember, we're trying to mitigate risk. We're trying to figure out, are you going to repay me? So if you don't have the answers to these questions, you're in trouble. And then you just want to get a book that tells you about all the various financial ratios you should just have, right? And I'll pull that up later. I'll let you know, I found it's by Professor Steve Rogers. Used to be at Northwestern and Harvard. He's got a great little book he's put together. I think he's earned like 3 or 4 companies or something. I'll pull that up and share that with everybody. And, it's a book that just says from a small business owner's perspective, these are like the 5 or 6 ratios you need to be looking at when you're talking to your accountant, right? And so, like Dr. Quasey said, when you come to see me, you're prepared, right? You got a template, right? You know what your ratios look like, and you can come talk to me and meet me where I am. Because like Ron talked about, the stereotype is that bruh's not going to come in prepared. We don't know nothing about ratios. We got a story to tell. The story won't match the financials, right? And most bankers are just accountants. Cash flow analysis is nothing but accounting. It's either direct or indirect cash flow method. Sorry to get, real technical, but that's what we're looking at, right? So you need to understand your ratios and how to, after you depreciated everything, how to add that back in so we can figure out what your cash flow is, okay? So, I'll give you a shout out for that other book momentarily.
Okay, thank you. I have 2 questions.
Can I just add something to it? Because
Sure.
I just don't like something done for the banker. I think if you're going to do a plan, you should do a plan for yourself first. And it should make sense to you and your business, first. And a lot of people talk about collateral, but I don't give loans for collateral. I want the business itself to be able to generate the kind of liquidity to pay me back. So the collateral is fine, but that's for a rainy day. So I just wanted to just let people know that it is important to have something in your back pocket every time, and whenever you're able to think about it, whether it's a monthly, quarterly, annually, or whatever, revise it, make it available, because you never know when an opportunity might show up. And so let me just give you an example of what's happening today with African American owned banks. There are lots of bigger banks talking to us, looking to be partners. They're all asking us the same kind of questions we ask our customers. So we're having to practice what we preach. And so what's helping us is I already have my plan. I already have my vision. I already have, where I have been, where I need to go. Same things that we need our people to do, but I don't do anything for any bank or for anybody else. I do it for myself, and you should do it for yourself.
Okay, thank you for that. There's two questions, the same type of question. So I'll frame it like this. The general question is community bank or large bank? And so more specifically, as a small business owner, is it best for you to bank with the community bank or a large bank in order to have a lending opportunity? And so even if you're going to build a relationship, I think what the core of these two questions is, is it better to start with a small community bank or a large bank to even be able to have the lending opportunity?
I'd like to take that one, Stacey. I think that question is nuanced, much to Daryl's point earlier, thinking about how you diversify those relationships and really understand, much like we want to understand your business model, you want to understand the best you can the business model of the particular bank that you're working with. So when we say community bank, we think about banks that are local to the community, local to the region, having an investment stake in doing business right in our backyard, right? So, and when we think about national banks or international banks, obviously their scope is much larger, i.e. their focus is much larger. But you could find a niche product and service at a large national or international bank that meets your needs more so than what you may find at the community bank. So I think actually, having that understanding and asking some of the right questions. If I'm a small business owner and I walk into a local community bank, can you tell me a little bit about the type of bank that you are? Providence Bank and Trust, for example, is a commercial bank. We make our bread and butter doing commercial and industrial loans. It's the vast majority of our portfolio. Do we still have consumer offerings where we do consumer loans, consumer mortgages, car loans, so forth and so on? Yes, but we're not primarily engaged in retail or consumer banking. We're engaged in serving middle market and small businesses. So that's a good thing to know when you walk through the door. Some banks may have a focus around real estate. So if I'm a real estate developer and I'm interested in buying wholes and acquiring single families and multifamily properties for cash flow, well, what's the bank's appetite and credit risk around that particular asset class? So asking these questions, and then here's another good tool, and this is a kind of like, I'm kind of sharing information about an organization that's making some of this data available and have it where a small business could see how all banks are investing in a local community. Mighty Deposits is a good tool, mightydeposits.com, where you can go and you can search any bank in the country. And they just recently added credit union data. So now you can look at community banks, national banks, credit unions, and you get to look at their investment record in terms of where their assets concentrated and how they invest in the local community. There was a clear distinction, obviously, because of the size of the larger banks, they did the volume of the PPP lending. But in the space of community banking and small businesses, I think community banks won out in terms of that overall experience. It wasn't the best experience for any of us. Large banks will admit that was a process that was more fumbled on their end than with regard to community banks, because we did the relationship aspects. We made the phone calls, we talked directly to the customers. You didn't find yourself in like a virtual portal where you're waiting on the computer to follow up, you had a real person on the other end of that experience, and that made the difference. So is that large bank going to give you a banker? Are you going to have a physical person that's working with you, or is it just a technology solution? Are you someone who's really good with technology and you don't think you need the value add of a personal relationship? I think we all can use the value add of a personal relationship. So these are some of the questions that you have to ask, and don't be afraid to ask them.
Thank you for that. That actually segues into our next question. There's a question that says, this kind of talks a little bit about what you were talking about, Dr. Kwesi. Since there isn't face-to-face interaction as much anymore, what does the road to opportunity for lending look like? What's required? How do you build that relationship if it's all done by technology?
Well, technology will be there. It will increasingly be there. But there are people behind the technology. So for me, I still try to go beyond and behind the technology to find who I should establish a relationship with. But I want to be well versed in the technology. I want to be able to utilize all its advantages. I want to be able to use it to not only advance my business, but also to have the relationship to be able to reach the person who is either at the bank or in the financial institution. So the technology still then becomes a facilitator. And so if you don't know how to use the technology, well, you're not going to get to the person. And so I do business with a couple of bigger banks in Chicago. Well, the technology is great, but what I like the most is that when I need something, I call someone, and they put me to whoever it is that I need to deal with, and I get calls back, and they talk to me, and I get things done. But the technology piece is there. So the relationship, you can't get away from that. And you can't get away from just trying to know someone and finding somebody who, for whatever reason, would decide that, well, I like this woman, or I like this man, or I like his story, or I like his history, or whatever it is. So I say to people, well, what is so likable about you? Find that thing that's like that someone might like, and stick with it and talk about it and develop it. But yes, the information and the kinds of things that people want to know about you, make it easily available, easily accessible, utilize the technology. And for me, that's what does it.
Can I just add to that too? It would behoove, I think, everyone to, I know we've got some people who are on the Zoom line here, and some of them may just be by phone. I don't know, I haven't seen the participant list, but investigate these kinds of technologies as well, where you're able to bring in those additional sensories. I mean, heck, they're doing newscasts from people's homes. So, if I can get my materials clean, I think is what I'm hearing Dr. Kwesi say, have your package that Daryl spoke about, have it be clean, have it be accurate, have it be complete. And then include this other element of being able to see someone, sort of do that visual handshake, if you will, or even that virtual fist bump, elbow bump or whatever floats your boat. But you've got to be creative to figure out how I can get in front of a potential banker / partner, and not just rely on just a telephone call. I mean, it is true that people do business with people that they like. It's hard to like someone that they've not seen. And so if there's concern about putting oneself in physical or health risks, figure out this technology, get somebody to help you, get that youngster who's working on, their schooling remotely, which God bless them, You know, they are figuring it out as they go. And it's got to be right, and it's got to be accurate, and it's got to be timely. Have them help you figure out how to set up a visual conference call situation with a prospective banker. And guess what? You could do 5 of these in a day and not leave your table.
No,
And I keep in something here. I like to see people, like to look at them. Now, when a prospective customer refuses to do video, now that just turns me off completely.
Yeah. Say, what you hiding?
Exactly. Exactly. And it just, you know, there's just something about the visual.
Yes.
Doesn't matter where that person, you know, might be, but if I'm being introduced and someone just wants to do a phone call, well, you know, as we all talk, you look at, you know, people's expressions and, you know, what they react to physically and everything. It helps. So it's technology, yes, but it's still, you know, making us make human contact.
Right.
So for me, it's important. I always ask people, especially when I'm looking for something, I ask them, can we do something that's visual?
Yeah.
That's a great point. We're right at 11 actually. So we're gonna wrap up, but there is one final question, and then I just want to close, and I'll just pose, hopefully we have time if everyone is still able to listen to this final question. But the question is, have any of the financial institutions here that you represent reduced their loan interest rates and at what terms for small businesses during the pandemic?
Well, we have not reduced interest rates for loans. What we have done is become more understanding in terms, well, particularly with our existing customers, and listening to their stories and making sure that we can go as far as we can so they can maintain their business, they can retain their customers and continue doing business. And for new ones, we're just simply asking them, well, look at where we are. You know, you're coming in new. What would you do if we met a situation like this again? And so no, in terms of, you know, reducing rates, but in terms of having empathy and compassion and being understanding, yes.
Nice. I think, does anybody else want to comment on that, or we can, because I want to be mindful of everyone's time.
This is Daryl. I did want to share some more information. Dr. Kwesi is absolutely right. It's about compassion and having a heart and really understanding what's going on. And, you know, sometimes a loan isn't always what you need. You might need a grant. So there's a great COVID-19 resource guide that's out there on the internet. You can find it at the CCLF website, and that's CCLF, right? And it's the COVID-19 resource guide. So if you just go out there to your web browser and put CCLF COVID-19 resource guide, it's about 55, 60 pages. At least every grant that the city, the state, the county has, it's updated every 4 days or so. Calvin and his team did a great job, you know, working with Kristen to put that thing together and keep it updated. It's a great resource, right? So besides talking to your banker, we still want to hear you, but go out there and take a look and see what's going on that's a grant or some type of other reduced loan that's getting sponsored by a government entity. That's part of that local market knowledge I talked about earlier, right? So that way you don't have a lot of time. I know you're trying to manage your business, but this resource guide puts it all in one place: state, county, city, and it'll also get you hooked up to some other CDFIs, community development financial institutions, IFF, CIC, Axion, some of the other lenders that are out there working hard, just like banks and credit unions are, to make sure that you get access to the proper capital.
Perfect. Thank you, thank you, thank you. So I want to thank everybody for participating. This was really great. Again, you know, at the Chicagoland Chamber, we also have an Illinois Small Business Development Center, also a great and valuable resource for small businesses to work with on, you know, cash flow and understanding what templates to use and talking and having these conversations. So make sure that you look for that. Again, this session has been recorded. As a wrap up, I will definitely be sending out a post webinar email that will include some contact information for the institutions that are represented. It will include all the resources in the chat. If you would like, you can hover over your 3 dots there on the chat and save your chat. That will help you there. I have also taken note of the resources that the panelists have shared. So I'll include those in the email, the guide, the websites, and all the things they mentioned. And I just want to thank you guys again. I really appreciate it. And I hope this was very informative for everyone. Everyone enjoy your day.
Okay.
Thank you all. And thank you, great panelists. This was a lot of fun.
Yeah,
All right.
absolutely.
Have a good day.
Bye.
All right.